essentially, just like you said, the market is down today again, 18 basis points. So that's what we now have is a 4-day losing streak, and really we're hoping to get some perspective on what is causing that. But essentially, what we're seeing is pretty much in line with what we've seen over the last 3 days. We've seen volumes come down significantly. Today, most of the losers, the major losers at least, were the rescued banks. So the coming into play of AMCON, the impact of that seems to be waning recently. So get some perspective on the Nigerian market movement now. We're joined in studio, like you said, by Adesoji Solanke, who is a banking analyst from Vetiva Capital Management. Thanks so much for coming on to the program.
Thanks.
So let's start with that. I know you guys put out a note today on your perspective on the market movements. What exactly is happening?
I think what we're seeing is the market is still going down, really. Today, volumes on value traded dipped. Okay, we had more losers than gainers. I mean, for the banking sector, the real gainers in that space was just really EcoBank and Fidelity Bank. Okay, like you said already, majority of the Irish banks still came in lower today. So for us, what we're really seeing is, despite the fact that some banks have released results which were impressive relative to the first quarter of the year, investors are not really looking at that as those numbers anymore. So I think we have to look at the broader picture. Okay, and what we are seeing is foreign investors are the ones really driving our market. So it's really the negative sentiments coming in from China, UK, and the US. If you remember this week, some strong negative economic statements came out from the US and the UK. Last week from the banks in China, the stress test they're trying to do, the impact it's having on their provision and capital. So all that negative information affecting us at the same time.
Right.
Even in South Africa, I think yesterday they were also down. Okay, reacting to negative sentiments from the United States. Okay, so similar, it's the same investors really, okay, because we are just part of the bigger picture.
Right.
Okay, so there's really no way those negative sentiments are affecting them in SA. Okay, and foreign investors are impacting our market significantly.
So you think it has less to do with what's the intervention of the SEC in the stock exchange?
Yeah, I think so. It's that's not really good.
Okay, but then I think one issue that many people have noted and suggested that is probably one of the reasons why the market is coming down is this issue of margin loans and the pressure on banks to sell down to reduce their exposure in line with the central bank's requirements by September 2010. In your view, do you think that is having any bearing on the move we are seeing right now?
No, I don't think so. Because the idea about banks and margins, I think everyone just tends to misunderstand how exposed the banks are really to the margin loans. Okay, the banks with real exposure are the troubled banks. Okay, for the banks that have been cleared, I remember the 10% is a percentage of your gross loan book.
Right.
Okay, which is not what you see on the face of the balance sheet. What you see on the face of the balance sheet is the net loans. Okay, so as a percentage of their gross loan book, most of the cleared banks are below 10%, so I don't think that's an issue.
So the cleared banks have less than 10%.
Yes,
that is
they
not
do
an
have
issue.
less than 10%.
All right, let's talk a bit about the rescued banks now. It's now about just a year. Saturday will be exactly a year since the central bank intervened in the first set of banks. So in your view, with the benefit of hindsight right now, what else could have been done really over this last 1 year that you probably would have wanted to see? And also maybe putting another question into that, what do you think is most critical going forward?
Okay, I think for us, when the intervention came in, I think we really started seeing, because we did a note back then, we started seeing the signs in the money market. Okay, because rates, interbank rates then just spiked 3 days prior to Friday.
Right.
Okay, and Friday the announcement came.
Right.
So I think really just managing the information and the reaction of the market would have been a better thing to handle, from my view. Going forward, if there's anything that can be done better, or should I say, what I think is really more critical is consolidating on the gains we've made. Okay, because definitely we're in a reconstruction phase, okay, and everybody just tends not to understand what's really going on. So I think going forward, it's really more about consolidating on the gains we've had so far. For example, AMC is coming on stream. We know that for banks, MPLs is a major challenge. Okay, AMC comes on stream, purchases your assets. Those are contingent liabilities. We know that if those assets have not been perfected in terms of documentation and things like that, banks would have to buy those assets back from the AMC. Okay, so really the process of sorting out those documentation, legal issues. Okay, AMC, the CBN I know is working out on sorting out what they call alternative dispute resolution mechanism, which really is going to help banks loop the challenges of the Nigerian legal system. Okay, that aside, other key things are shared services, okay, which have an impact on banks' cost profile.
Right.
Okay, movement of cash, a lot of things really, but it's really more about consolidating on the gains we've made so far going forward.
All right. Unfortunately, we may have to wrap up very quickly, but just a quick point on Skye Bank.
Okay.
We're talking about that off camera. Just very quickly, your general impressions of the results we saw.
Basically, the results at top line level, it bucked the trend. Okay, gross earnings actually came in higher quarter on quarter. Okay, but then interest income came in lower. But the key challenge for the bank that we saw in the results was in terms of operating expenses and the numbers that were actually published. There was some misstatements, let me put it that way, of the results. Okay, which if you're not privy to this information, you actually misread cost to income ratios and things like that. But putting those aside,
actually higher than what.
Yeah, no. What it was actually, the actual cost to income ratio is lower, about 75%. With the misstatement at about 79%. That's not what it should be.
Right.
I don't think we should be having this kind of number or data integrity issues at this point in time. But then, still for Skye Bank, we are still overweight on the stock. They're working on their capital raising, which I believe they should be able to raise for the end of the year. They went international banking status. They got somewhat of about 15 billion from the Bank of Industry. Definitely, they're going to build their loan books over the next half of the year. So ROE of 12%. At least, I think they'll be able to achieve by the end of the year. And
we know that they're not interested in any of the rescued banks. So obviously no risk in that regard.
Well, I think you really just have to look at those statements in context. Because many of the banks are still scoping the entire space. But whether they're actually going to win the bid is a different issue. But I think for Skye Bank, they're really focusing more on organic growth. Right. Okay, I believe they'll be able to raise capital they plan on raising. $100 million. Okay, so organic growth for them is a key strategy. I think it will work. Okay, because if you look at it, acquiring of the troubled banks is acquiring troubled assets. Right. So we're overweight on Skye Bank, that aside. All right.
Thanks so much for your very useful insights there.
Okay.
That was Adesoji Solanke from Vetiva Capital, giving us very useful views on the market.